Pre-app 1003. Listen, we've opened this up with wholesalers right now. We're working on a couple of contracts there, but for the individual loan officer or companies who want to pick up pre-app 1003 for yourself, you can do so now on an individual basis. And to get it, all you have to do is click on this banner right over there. Pre-app 1003, it is the shortest distance between a loan officer and a consumer. And what it does is it gets buyers off the market faster than any product I've ever seen. Check it out. Hey guys, Brian Stevens here with the National Real Estate Post. I'm with Louise Woods from Westland Wholesale, and today we're going to be talking about a loan that you could put behind, actually not even behind an FHA loan. It's called Sapphire, and it's brought to you by the National Home Buyers Fund. It's in California, Nevada, and my suspicions are through the HFA programs or other, community reinvestment funds, you might have something like this in your state that is worth looking into because this is absolutely fantastic. So as a wholesaler, you're offering this out there to your mortgage brokers or anybody who's banking and working with you right now.
Correct.
So why don't you tell us a little bit about what Sapphire is?
The Sapphire is basically a grant program that provides down payment and assistance for closing costs for FHA loans up to $417,000 conforming loan limit for California, of course. It's regulated by FHA income limits, or excuse me, county limits.
115%. If you're whatever your area is, it's going to be 115% of your median. Okay.
Well, the loan amount is also restricted by FHA county limits.
Gotcha.
That's what I was saying.
Okay.
There are income limits. 640 credit score, typically a 43 to 45 DTI.
43, 45 on the back end. Any front end requirements on that?
There is no front end.
Okay. Now, you said though before that this goes up to 50 on the back end.
It does. The guidelines follow FHA.
Let's push it so people can't make these payments. Just strap them.
Basically, we'll take DU findings. We need a DU approve eligible. So we do find once you hit 43, 45, the DU starts pushing back with the Sapphire.
Okay.
But we have in some cases gotten them approved up that high.
Okay, so let's talk about this grant for a second. And this is really where the rubber meets the road, guys. If you choose a rate on your FHA deal of 3%, right now, today, 3%, I saw your rate sheet, 3% does not give you any grant money, but you get a 3% interest rate on a 30-year fixed rate FHA deal right now.
Right.
So screw the grant money, you get a below market rate. So you have something, you have a quiver, or excuse me, you have an arrow in your quiver that your competition simply doesn't have. You can sell 3% interest rates where your competition is selling above 3%. Now, if you move up to a 3.5% interest rate, or is that what it is?
It's 3.5%.
Okay.
Gives you a 3% grant.
Okay, so a 3.5 on a 30-year fixed rate FHA deal. You get 3% of your loan amount.
You do.
With or without MI? Just split hairs.
There is MI still.
No. 3% of your loan amount without MI.
Oh, correct.
Okay,
yes.
So you get 3%. So you're looking at a $200,000 house. You're looking at close to $6,000 in money that does not need to be repaid back ever.
That is correct.
Now, if you move your rate all the way up to a whopping and inconceivable 4%, so now you're selling your clients a 4% interest rate, you're probably a little above market today, maybe, it's right around there. You get how much grant?
You get a 5% grant.
So you get a 5% grant. Now, can you use seller concessions on this as well?
You can follow, again, the FHA guidelines and have up to a 6% seller credit towards closing costs. So the grant has to cover the down, which is 3.5%, and the additional credit from the seller can cover closing costs.
Okay, and there's a 1.5% comp, right? So everything's 1.5% comp on this?
There's a 1.5% origination fee.
Okay.
And then you would have your traditional closing costs such as title, escrow, appraisal.
Okay, so you're getting a 5% grant. You can get 6% in seller's cost, so you can get 11%, which is going to cover everything. Is there any minimum cash requirement from the borrower on this?
Absolutely not.
So,
zero.
So you're telling me that your borrower has absolutely zero skin in the game? Nothing. I have a nickel in my pocket and I do not need to spend it.
That is correct.
This is crap. I got to tell you, this is crap. Because I remember a number of years ago, everybody was getting down on Nehemiah, which allowed the seller to go ahead and give the money. It was robbing Peter to pay Paul type of thing. But the big reason the regulators in HUD were against this is because the buyer had no skin in the game, and that's why they killed a program. A program, by the way, which didn't cost states or federal agencies a dime. It actually made money for your state and federal agencies. This thing is coming back with zero skin in the game whatsoever. It does, in fact, cost state and federal agencies. Okay, but this one is sanctioned, and I can tell you this right now. For those of you who are saying this thing is going to go by the wayside, I'm telling you right now, I have it on high authority, the highest authority that you can get on this, that this program is in fact okay, and it's got the blessing of HUD. Now, can you do this with VA or USDA? It's a
No,
Ginny
you
product.
cannot.
You cannot. Okay, so give me some more highlights of the program.
So the product does have household income limits, right? So you have to go by county. So there is a site that is on the guidelines. You look it up and you say basically, okay, so for Contra Costa, Alameda County, here in California, you have upwards, I believe it's 103,000. That's your household income. Okay. Not necessarily the same as qualifying income, right? So it's everybody in your house that basically makes money that's going to be on the loan. Gotcha. So, that's definitely one. You could also have non-occupant co-borrowers technically on this loan, but you have to stay below those household income limits because they're basically signing on the note. 100% gift funds are allowed. So in the event that you're in a competitive market, you can't get a seller credit. Mom and dad are willing to pitch in for the closing costs. That's perfectly acceptable as well.
Subordinate financing?
There is no subordinate financing technically because the grant it doesn't go into second position. It is a grant. It's completely non-repaid, not recorded. Same for your application process. It's just a first mortgage application.
But you can't have subordinate financing because HFA is going behind this in some cases.
Technically, you could.
Okay, and what about refinancing? Is there any recapture period? Because a lot of grant money or a lot of this money has recaptured.
There is no recapture period on it at all. We do have something in our lender agreements that we require that all loans make a minimum of 6 months, 6 payments, 6 months. And in order to do an FHA Streamline refi, which has been popular in the past behind these, you're required to make 6 payments.
What about condos, PUDs, HUDs, manufactured, that type of stuff?
They will do condos that are FHA approved, PUDs across the board, single family across the board, and in some areas manufactured.
Okay, well, fantastic. Hey, listen, if you can find something similar in your area, let us know. We want to share it with people who can also use this as well. Remember, if you're in California, Nevada right now, it's a 3% FHA deal with no grant. It's a 3.5% interest rate with a 3% grant, no recapture period, and a 4% with a whopping 5% grant. Seller concessions, straight up FHA deal. You do have a 640 minimum score requirement, a 680 score requirement for your manufactured homes, but when you're looking at this thing, this is a simple program. One last thing, okay, I don't want to forget this. What's the second package that you have to put together in order to submit this?
You do not. That's what I'm saying. It's a first mortgage application only. It's when you upload it into our system, it's basically selecting the correct product code and then putting, on your application that your down payment is grant money.
Where is the money coming through?
As far as
where are you getting it from? Where's the grant coming from? Who's providing you with the grant money?
We sell these to Citi.
You sell these to Citi right now? It's fantastic, guys. Anyways, I hope this helps out. If you'd like to learn more about this, you can always click on the link down below and contact our friends over here at Westland Wholesale. And with that said, we will catch you tomorrow. If you're meeting us for the first time, subscribe right over there. Forward this on to anybody else who's in real estate lending, mortgage, real estate, or talking housing because it helps us bring this to you every day. With that said, ciao, man, guys. We'll see you soon.